stocks shook off earlier losses to mostly rise Friday afternoon as investors viewed a surprise jobs report. However, the stronger jobs report provides more evidence for the Federal Reserve to continue along its more hawkish monetary policy path towards higher rates. But other big surprises were Google's strong earnings report causing a melt-up, followed by Meta's, also known as Facebook, poor earnings report causing a meltdown, followed by Amazon's blowout earnings report and the announced price hike on its premium Amazon Prime subscription, creating another melt-up. Talk about whiplash. And in other news, reports are that Amazon has also been speaking to advisors about a potential deal with Peloton, the cash-burning cow. And no, there was no pun intended. In after-hours trading on Friday, Peloton was up about 30%. And so, we transition from January to February. Amazon and the buy-the-dip investors have saved the week and rescued other investors from more pain. So, what do the charts show now? Let's take a look. Two charts today, beginning with the volatility index, and the symbol is $VIX in the upper left, as you can see using stockcharts.com. And just quickly looking at this, you can see that we topped out here above 38. We've come on down and we hit a little hitch here. That is relatively common. If you go back here, say in this time frame from August, you can see the move up, down, and the hitch. Here, September, the move up, down, this is a bigger hitch followed by a smaller hitch. And then this move up here through early December, down followed by a hitch. So that's what you expect, the move on up, coming on down, and here's the hitch. But we're on our way down. We're going to calm down with the VIX, which means that the stock market's going to head up. And I'm convinced of that. Simply down here in the lower portion of the chart, you can see the fast line on the MACD moving on through down below the slow line. And it looks like it's going to continue on down. So I think the probabilities are that we do continue to calm down in the VIX and the stock market heads up. All right, let's now go to our charts. And we're now looking at the 2-year weekly chart on the spiders, the SPY, and the close on Friday was 448.70. And as you can see from this chart here, from way back here, for the most part, we've run up fairly well through this channel here. We had this minor break here, but a bigger break that we're working our way out of right now. It came down just below the 50 EMA. Right now it's hitting that 20 EMA, but based on the VIX and I think some of the oscillators that we'll see here in a second, I think we're going to work our way up and back into that channel. But let's go ahead and take a look. Into volume, not going to show us too much, but here you have the MAC. You can see that the fast line looks like it's starting to curve and hopefully bottoming and basing. But here's the main problem with the MAC, and we've talked about this before, but let's go back here. From this point on all the way through here, you can see that arc moving through. Now, on the upside, everything is peachy keen. As long as we can stay above that slow line, then the market is strong and strengthening. But you can see here it started to weak here in early 2021, but it continued on up. Things were still hunky-dory. But about this time frame here, things started to come under, and you can see that the arc started to level out and maybe even start going down. And that is giving you early signs that things are weakening. Now, this was the first moderate break at this point here, but we did come back up and through that slow line, and we were up for a little while but came back under. And then you can see here perhaps the fast line trundled along that slow line on the underside, and when it does that, there's the possibility of a break, and that's what happened. We got this break underneath. So we want to watch the fast line, see how it recovers, and whether or not it gets above that slow line. Hopefully we can bottom and base near this zero line and continue on up. But there's a possibility that this arc continues on down, and if it does continue down, then things are continuing to weaken. So further breaks, maybe more significant breaks, could occur, but we'll see. Here into the histogram, you see pretty much the same thing. Again, here in the price rate of change, you don't really see an arc, but you definitely can see how things are weakening. We're below that zero or midline. With the fast line, it's going to come on up, and I would imagine it's going to break through that slow line as it normally does, and it's going to sawtooth on its way down here. But we'll have to wait and see how far down the slow line goes to that zero line and if it goes below. Again, that's another sign of weakening. Already, the RSI here, you can see, has broken below that midline, so definitely some weakness. Not necessarily a very good arc, but you can kind of get the idea here. So we want to see if these oscillators continue to weaken. Now, down into the stochastics, pretty much the same thing there, as well as in the Williams. The Williams seems to have broken down much further than the other oscillators, and this arc is perhaps a little bit shorter, say from this period here all the way up and through, and then down here. So, is this break all the way down here a new reset? I don't really think so, but we'll watch that. We'll know. We'll go back and take a look at the MAC. We're going to be following the MAC. That's my favorite oscillator to see if that continues to arc down. If it does, things are continuing to weaken, and breaks in the market will be a little bit more problematic and the probability a little bit higher. But for right now, it looks like we're going to bottom and base and head up again into that channel that we've been in for such a long time. So that won't happen until, say, next week or the following week. We'll just watch and see how it evolves. And for today, that's ChewDog Charts. Thank you.